Housing prices are at an all-time high. In this video today, I talk about whether it still makes sense to buy rental properties in today's market. Are we at the top of a bubble or what? You can't wait. You have to have solid fundamentals, get into your first property. So what do you have to do? You're gonna wanna go by a few rules of thumb at the very least. If you ask me, should I buy a house right now? Should I get into rental real estate? I get asked all the time, should I buy a house now for rental real estate, or is it too late? Are we at the top of a bubble or what? Well, listen, the advice I always give to everybody, you can't time the market. You don't know. When I first started investing in real estate 7 years ago, it was a few years after the massive crash of '08, people were already talking about maybe prices are too high, maybe we're about to fall back down, maybe there's going to be a correction. If I had waited 7 years ago, I still would not have my first property. I still would not be where I am. You can't wait. You have to have solid fundamentals, get into your first property. So what do you have to do? You have to make sure the property cash flows. Look at the income, look at the expenses. Is it all going to make sense? If you like this video, make sure you smash that subscribe button. Now, back to the video. So you're gonna wanna go by a few rules of thumb at the very least, starting with the 50% rule. And that's saying that all of your income that comes in, you wanna take half of that and plan it towards expenses. So let's say your property makes $1,000 a month in rent. You're gonna wanna set $500 aside for things like taxes and insurance and maintenance and fixing that furnace that's gonna go or the roof that's gonna go. All these things, you set that money aside to build up a bit of a reserve. Now you've got the other 50%, the other $500. That is, you're gonna pay your mortgage. So let's say that's, on this example, maybe $300. So you pay your mortgage. Now you've got profit of $200 per month in this example. There's also the 1 to 2% rule. And it used to be that we could buy a house for the 2% rule. And what that would mean is that rents are about 2% per month of the purchase price. So if we purchase a house for $100,000, we would look for our monthly rents to be about $2,000 per month. That's 2%. That lately is very hard to find. And in fact, if you do find a 2% rule house, I actually would question whether it's a good deal right now. It's either a screaming deal and you found the deal of the century, or there's probably a lot wrong with that house. So definitely verify that your rents are right, that the property's right, and there's not some huge gaping issue at the property. Lately, we've seen the 1% rule be more common. So if your house is $100,000, you're going to see rents around $1,000 per month. That would still be a great deal in most markets. Now, every market is slightly different. You also have to factor things in like how much work the property needs, what condition it's in, what the surrounding area is like. There's a lot of things that have to go into it. But these are the quick rules of thumb that can help guide you on whether a house is going to be a good rental property or not. You have to make sure the property is going to cash flow, because we don't know what's going to happen with the prices. But let's say you buy a house for $150,000, right? And you've got a mortgage, you've got taxes, insurance, maintenance, all of that. Fine. If your property cash flows, you can withstand a dip in housing prices. Let's say that house goes from $150,000. There's a huge crash tomorrow. Now that house is only worth $100,000. That only affects you when you sell. So if you're not going to sell, if your plan is to hold on to this property long term, you're going to be able to ride that wave. You're going to ride the down and you're going to ride it right back up over time. During that time, you have to cash flow. That's why knowing your expenses is so important, because if I am putting my tenants into a year-long lease right now, and I know that I'm cash flowing, hopefully with a bit of buffer in there and profit on top, then I should be able to withstand a downturn. Chances are, even in a downturn on rents, if the housing prices drop 50%, your rents are not going to drop 50%. That would be extremely unprecedented. So rents, maybe they drop 20%, 30%, fine. Maybe you go from profiting to breaking even. But guess what? You're still paying down your mortgage. You're still operating the house. You're still taking care of it. So we can withstand the sways in prices high and low by investing for the long term. So if you ask me, should I buy a house right now? Should I get into rental real estate? I am always going to say yes, no matter what's happening in the market. So if you are thinking about buying a rental property, let me know below. I want to hear from you. I want to know where you're looking, what kinds of properties you're seeing. Are you using a realtor or using a wholesaler? Leave us a comment. Let us know what you're seeing so that we can help you along your journey. I thought, geez, I did the math wrong. I said we could put links over here.
So you say
we've seen the run. Smash that subscribe button. What am I supposed to do when I look back? Is that not what you wanted? Is that what you wanted?
Yeah.
Okay. here to not record a video because we are not rolling. Just want to let you know I am not Matt Faircloth, but you should stay tuned anyway. Have a great and profitable week.